It's a good afternoon to you. Welcome then to the Johannesburg Stock Exchange as we get a little bit of a measure on what the markets are doing in this afternoon trading picture. As you can tell from the side of your screen there, nearly 30 minutes to go until the Finance Minister Tito Mboweni delivers his all-important budget speech 2021. Will he be able to keep expenses in check? Where exactly will he find revenue from? That is the question he will have to answer, and a question that international institutions will all be asking from here on in. How much room does he have to maneuver? The argument would certainly be very little. Talking about very little movement, the markets have also tilted in different directions today, but contrasting to what we've seen on the local side, the Asian index has gone down for the most part. Nearly 3% lost out in Hong Kong earlier this morning, and that trade just comes from a few fears and worries about whether enough will be done to create a little bit more stimulus in global markets, and whether indeed that $1.9 trillion stimulus bill, which will now be signed or rather voted on Friday out in the United States, is going to be very key and critical to the growth of the global community as well. More money aflush, meaning that investors willing to get into the riskier assets. It does seem as well that the technology stocks are no longer the cream of the crop at present anyway, and that does mean that we're seeing a lot of negativity then, particularly out in that Asian front. Onto the European market there, not too massive a movement when compared to the Asian index. Only the FTSE 100 has gone down, and that's just around 0.1%. The DAX out in Germany is 0.7% stronger though, with the CAC 40 in a similar mood, going up 0.1% there. Locally, well, big gains, 1.1% gain today. We're headed towards 67,000 points again, 66,663 at present. The big gainers today so far have been the resources. That's because gold and platinum miners have been able to gain so much today. In fact, platinum miners taking on 1.7% of gains by this lunchtime trading picture. The banking counter is only marginally higher, so it does mean that financials don't have too much to write home about, but industrials are managing to gain 0.8%, despite the negative picture coming through from Asia as well. So it does mean a whole sense of positivity still reigns there. The South African listed property segment is 0.25% weaker, stronger should I say, and that does come from a sense of inevitability, because things have been in negative territory for quite some time out on that front. In terms of companies that have gone higher, the likes of Hammerson, Textainer, even Royal Bafokeng Platinum, which is of course one of the platinum miners out in this front, taking on a big gain there, 4.5% in this midday trading picture. In terms of negativity, we're seeing Adcock Ingram unfortunately suffered today. So too Murray and Roberts. Murray and Roberts going down 2.5%, 3.7% weaker for Adcock Ingram there as well. Onto the commodities board then. As you can see across this board, we're seeing just a sense of green for the most part. This in dollar terms then means that Brent crude oil has gone up 0.8% to $65.90 a barrel there. Perhaps still a little bit more question marks with regards to the production out in the United States, particularly out in the state of Texas, and whether that will return to normal at any point in time. If it does, it certainly does point to some positivity there too. Platinum does go up 2.5%, now sitting just below that $1,300 an ounce mark, with gold still sitting pretty much at the same level it has been for quite some time now, $1,808 a fine ounce there. And the local currency front, a little bit of nervous trading perhaps is what we're seeing out on this side of the world as we head towards that fated budget speech. Pretty much flat. Investors not really sure which direction to go to against the US dollar, or because this time around we really do not know what Finance Minister Tito Mboweni will be able to put together. Let's remember last year he had a completely different budget and even suggested cutting wages cutting spending and expenses by 300 billion rand over a 3-year period, which would be around 1% of South Africa's GDP every single year. That denotes then how difficult the situation will be. 160 billion rand of that is just supposed to come from the public service wages, and that has been disputed, of course, all the way through to the Constitutional Court. The government reneging then on the final year of that 3-year wage agreement with public service workers that began in 2018. More cutting of expenses and costs will be necessary, though, in order for South Africa to avoid a sovereign debt crisis, which the finance minister did warn the country about in June last year. So we are seeing nervousness across this part of the world. The euro is a 1/10% weaker. South Africa's rand against the euro is weaker by a 1/10% there, while the British pound as well, 20 rand 53 odd is how much you will get there or spend in order to get a British pound. The Bitcoin price, well, having seen it fall massively yesterday, around 14%, now it's going up nearly 6% at present, sitting just above that $50,000 mark. Makwe Masilela from Makwe Fund Managers joins us then to get to grips with this market picture a little bit. Makwe, thank you so much for the time. So let's get to grips with this market a little bit then. Everything out in Asia goes completely down. A bit of a mixed one out in the United States with only the Nasdaq in negative territory. But we're just looking positive. Where's this coming from? Is there risk on trading in the market?
Definitely it's back on, and if you check the US, I think you need to look into it in the context that it managed to rebound from the losses overnight, and that's mainly after the speech that came from the US Federal Reserve chairperson saying or downplaying all these issues about inflation, all these issues about rising yields, because if you remember, Arabile, the past week or so, markets were mainly concerned about inflation, markets were concerned also about the yields going up, and because if yields continue to go up, then when it comes to corporates, especially those who manage to borrow or get easy borrowings, then it means their repayment cost starts going up, and that's going to eat into their earnings. So if the US Federal Reserve is saying, listen, we still have a very long way to go, we're not going to be changing any of our policy stance now, then it was more of a risk on trade. And yes, the JSE so far has managed to claw back almost half of the losses that were registered yesterday.
Yeah, so it gets very interesting then from here. I mean, if liquidity gets flushed into the market, as you said, risk on trade becomes a thing because investors are a little bit more flush with cash and they're willing to get into some of these emerging market spaces. But it doesn't seem that they'll be willing to get into technology shares because those are seemingly not the flavor of the month so far, for now anyway. And that's just because they're looking at cyclical stocks, perhaps the ones that are bound to get better because of the opening up of global economies. How far can that go?
And it only makes sense, remember when it comes to tech stocks, those are the kind of stocks that have been going up during lockdown because people were using the technology anyway to get along, whether working from home or studying from home. And now other stocks, because economies were closed, it made sense that they struggle. So it only makes sense now that as economy starts to reopen, as we expect more stimulus to come into the markets, and it's not only the fiscal one, we still expect the likes of the European Central Bank to also continue to do something from that fund, then definitely those kind of stocks have to start benefiting because they were left out before. And fortunately, their valuations are not overstretched. But we always have to keep an eye when it comes to the 10-year bond yield, because the minute it starts going up as well, people will start asking themselves, why should I continue to take a risk if I can just sit back and buy maybe a 10-year bond and maybe get 1.6, 1.7%? And you start comparing that yield with any dividend yield that will be getting from any other stock. So that kind of competition, it will always be there. So hence it's important to continue to keep an eye on those yields, especially the 10-year, because that's the one that is mainly used, especially when they look at mortgage bonds, when they look at student loans, they use that as a benchmark.
Let's get then into something that, of course, would be remiss for us to not talk about on a day like this. It's around 22 minutes, under 22 minutes to go until the finance minister delivers that fated budget speech. Then your biggest expectations here, will he indeed continue to try and cut spending, and where will he find it from?
He'll have to, because that's what people need, especially rating agencies. But it doesn't make sense to try to grow your economy by cutting spending. But we expect him to also get that 5 billion that he said that in the midterm we're looking for 40 billion. The 5 billion have to come out now, probably from things tax, but also maybe he might look at the likes of estate duty or what we call inheritance tax to start increasing it, because Arabile, that's not things that you worked for. If it's an inheritance, I think you can live with a higher tax compared to if you have the tax your salary every month.
What kind of happens though in a time when you need to cut as much as possible? You need to find money from anywhere you can. You haven't been able to bring it in. Where exactly do you think he heads to from here? And do you think we edge a little closer to that sovereign debt crisis he warned us about?
Not really, but we're in a better position to continue to borrow. If you check the first 2 months or so, all our bond subscription, all our bond issuance were oversubscribed. And if you look at them as the treasurer when it comes to the issuance of bonds, they're way ahead of what they budgeted for because they took advantage of the demand. They're taking advantage as well of the rising yields or the better yields that we offer back home here. So raising money is not an issue for us for now. The most important thing is that we have to make sure with that money, we use it in such a way that there's a serious multiplier effect. It doesn't just go to consumption. Then we are able to generate more from whatever rent that we spend in our economy, because the ultimate solution to our situation is to get the economy to start growing. We cannot forever rely on cutting costs. We cannot forever rely on increasing interest rates. We have to get to a point where the economy starts to grow. So use that money as the markets are favorable for you for now to make sure that you do the right investments that will create a necessary multiplier effect in the economy.
Yeah. All right. Very quickly, equity news. Adcock Ingram is, the biggest loser actually today out in the market front. So not necessarily doing too well, if I'm not mistaken, out on this board. Actually, if I just take a look behind me, it is down 3.7%. In fact, so a big loser today. Not necessarily doing well with its numbers.
Definitely, but they managed to increase their revenue by 3.6% because remember they managed to acquire that company that's specializing in home care. And now going forward, the guys, they know that for the past 6 months, they recorded or they expect losses of 14.6% when it comes to their profits. But it makes sense because consumer behavior changed. As we've seen, when it comes to demand for the vitamins, immune boosters was high, renal products were high, but the likes of the other flu, whatever, the demand was poor because we didn't have the flu season, as well when it becomes to branded prescriptions because fewer people were visiting doctors.
Yep. Makwe, appreciate the time. Always good chatting to you. We look forward to, of course, the budget speech in what is now just over 18 minutes time. Makwe Masilela from Makwe Fund Managers joining us here on this Wednesday afternoon. Cometh the hour, well, cometh the man. In less than 18 or around 18 minutes time from now, the aloe tree will come back into focus. Finance Minister Tito Mboweni is going to have to draw more than just a straight line. It's going to be a line that will set South Africa's course, at least for the next year. How difficult will it be? Well, how long is a piece of string and how high can an aloe grow? That is all we have time for here at the Johannesburg Stock Exchange. My colleagues, Nastasia Arendse, Nompumelelo Siziba, as well as Nzinga Qunta, have been taking good care of you, and they will continue to do that. My colleague Nzinga Qunta joining you as well in a moment or two to get you the run-up to that fated budget speech. Do enjoy it. Do hopefully get some of what you hope for from the Finance Minister. From me here at the Johannesburg Stock Exchange, that's where the buck stops.